But one of those big guys on Wall Street is on the phone right now. He's Bob Dahl of Nuveen Asset Management. Bob, what are you doing right now? Are you advising people buy at the moment? We're down 970 points on the Dow.
Liz, I think this is, as you all just been talking, this is technical. It's not fundamental.
Okay.
Yes, higher rates and fears of higher inflation are fundamentals that cause this, but the aggravation is coming from the structure in the market and the illiquidity in certain pockets in the market. And we all know that bull market corrections are usually very severe. That we haven't had one for some time makes it all the more severe. I believe the economy is still okay, and when the dust settles, who knows when that is, Liz, market will come back because this economic cycle is far from over.
Okay, of course you can't count out American business and good businesses going through maybe shaky times, which is, folks, what you are seeing in some of these stocks. At one point, I believe, and I'm not quite sure because my Thompson isn't up to speed at the moment, but every single Dow component stock was down. That may have changed in the last couple of seconds, but it is a rough and tumble moment. And what we're seeing here is all red on the screen for the Dow 30 heat map. So it doesn't matter if you look at Dow laggards. There are no Dow leaders except ones that are down less, right, Bob? So is there at least a point near within now and the end of the session where people could do a little bit of shopping on sale?
Absolutely. If you've been one of those people on the sidelines with a lot of cash, waiting and waiting and waiting, this is your chance. You don't have to be hero and put it all in before the close today or tomorrow morning, but start nibbling away. These technical moves are very unpredictable, but the values that are slowly being created are going to pay off over time. A lot of the healthcare stocks have good earnings prospects. They're not all that expensive. Some tech is probably going to look interesting. Some of the banks are getting hit hard. Their fundamentals are improving. The economy is doing better. Rates are moving up, and we have less regulation. So you can do some shopping. Be selective, and don't try to be a hero.
You just made an interesting point a second or two ago, Bob, and that was that this is not fundamental. Again, the economy still looks pretty solid, but let's get that from the chief economist of Wells Fargo, who's just gotten in the chair, John Silvia. Weigh in here. Anything you see that would have frightened these markets from an economic standpoint?
Well, I think the long-term interest rates have risen a little bit more than the consensus had expected. But I think Bob's got it right. And again, Liz, you were talking about 2008. In 2008, remember the first vote on top was a disapproval. They voted it down. So you got the economic policy being very negative. Second, on liquidity, there wasn't a lot of liquidity in the credit markets, so people weren't sure about what their money was doing and where it was going. And then finally, we have an economy growing at around 2.5% to 3% right now. That's quite different than the housing correction that was already underway by the fall of 2008. So the fundamentals in the economy still very, very good here, but I think there is some price adjustment to the higher, longer-term interest rates.
Aside from that price adjustment, what are big buyers of stocks doing? Peter Mallouk has about $33 billion in assets under management over at Creative Planning. You're the president and CEO. What are you doing today? Are you all in? Aside from being on TV with us, you telling your trading desk to start buying?
Well, we love this. I mean, if you look at today, it's staggering from a numbers perspective, but you have a couple things going on. I mean, part of it is fundamental. We've got anticipated rising rates, but it's for a good reason. It's low unemployment. You have the technical component, the machine trading kicking in, which I think is great for someone who's a real investor who's entering into the market over time or has liquidity, bonds, cash. This is your opportunity. You got all of January back if you were sitting on the sidelines. And so we're staying the course. We're going to be buyers through all of this, and I hope it goes on a little bit longer. I would also say one more thing to add to what your guests have been saying is if you read about the major custodians the last month, they talked about record account openings, new money coming into the market for the first time. A lot of it was millennials. What did they have before? 13, 14 straight months of global markets going up, something that had never happened before in history. Well, welcome to the party. That's not normal. And so I think the last money in has probably been the first money out alongside the machines. And I think that you combine all that together and, maybe it goes on a little bit longer, but the fundamentals of the bull market are still there. And so for anybody that's a real, not even long-term investor, but intermediate-term investor, it's nothing to shake your head about.